Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining in style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
Start your day earlier and smarter. On top of the news.
Political turmoil and the Eurozone heating up.
Global markets.
Stocks rebounding.
Ahead of
The station you're listening to is experiencing technical difficulties.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Placed under quarantine in a move that could isolate as many as 1,000 people as the virus continues to spread further into Europe. And German industrial group ThyssenKrupp is swept up in the sell-off despite sealing a deal to sell its elevator unit to a private equity consortium led by Advent and Cinven in the biggest buyout in Europe since 2007. A lot of green on this board this morning, as you can see, entirely red, in fact, as this sell-off continues from the US into Asia and now here in Europe this morning. Let's take a look at the individual European markets to see where the real losses are. You can see here in London, the FTSE 100 down more than 3.5%. It's 4.25% down in Germany with the Xetra-DAX, the CAC Caron, almost 3.8%. Italy, not quite as bad as its peers, but still more than 3% lower this morning. Let's take a look at the individual sectors to see where some of the pain is most specific. Travel and leisure, as I mentioned there in the headlines, down almost 5% this morning. Basic resources, we've seen them. Obviously, these stocks very, very exposed to demand from places like China. They're selling off aggressively as well this morning, down 4.75%. Technology stocks as well here in Europe down more than 4.5%. Let's talk about what happened overnight, though. In the US, of course, we saw some absolutely extraordinary circumstances. The Dow Jones closing off 4.4%. Similar story with the S&P 500. 4.6% for the NASDAQ. And, of course, these were extraordinary times, one of the fastest corrections in history. If we look at the volatility, of course, across these markets, you're seeing there the VIX 12.95% higher. Look at this spike just here over the last few hours of the trading day. Absolutely extraordinary, coming off from that level towards the end of Wednesday, just rising through that period. And if we look ahead to the day's trading on the other side of the Atlantic right now, you can see all three of those major markets right now being called significantly lower. The Dow Jones currently with an implied open down more than 620 points. The World Health Organization warning against complacency during the coronavirus outbreak. This is one of the reasons investors are getting concerned. It says it would be a, quote, fatal mistake for countries to assume that they will not be affected by the virus. The WHO's Director General insisted the outbreak does have the potential to become a pandemic, and he called for action in a bid to prevent further infection. It is, he said, not a time for fear. German authorities, well, they've quarantined a town and reportedly urged some 1,000 people not to leave their homes. This happened after 14 cases of coronavirus were confirmed in the town of Kreis-Heinsberg on Thursday evening. Officials fear the virus could have spread at a carnival event in the town 2 weeks ago. It takes the total number of confirmed cases in the state of North Rhine-Westphalia to 20 and total number in the country of Germany to around 40. The number of confirmed coronavirus cases has now topped 82,000 worldwide, with countries outside China now accounting for around 3/4 of new infections. Nigeria has reported the first case in sub-Saharan Africa, while the number of confirmed cases in Iran, South Korea and Italy still continuing to rise. The head of China's health body responsible for tackling the outbreak hailed the government's efforts there and forecast that the virus would be contained by spring.
The situation overseas has changed and we need to pay more attention to it. However, China is still a priority because it originated in China, or was discovered first in China, but not necessarily originated in China. They predicted it will last until the end of May at least, but we predict that it will basically be controlled by the end of April at the latest. We're not there yet, and we like to wait and see who is right. We made the prediction because of the strong measures taken by the central government and the mass participation in prevention and control efforts.
Well, I'm joined now by Chris Southworth, the Secretary General of the International Chamber of Commerce, and Ginny Yan, Chief China Economist from ICBC Standard Bank. Let me start with you, Ginny. This started in China. We don't yet have a huge amount of hard data in terms of the economic impact there, but we should get some this weekend. How much information do you think those PMI numbers coming out on Saturday will actually provide us about what this has meant for businesses there on the ground?
Well, this is the first set of leading indicators, so which means that this is the first signal of how much these disruptions have meant for the economic activities in China. I would expect to see not a very good number. I think most economists are looking to see that the extent of the disruption to supply chains, production, as well as any economic activity involving human interaction could be completely disrupted. Regardless of the Lunar China New Year, for the whole of the month, February, probably the confidence around the likelihood of continued disruptions would have remained. So this set of data is quite important. I think given the market conditions, maybe people are looking for this to be the real official data signal that the disruptions will mean that further policy action may be warranted.
So we see a lot over the last 24 hours about how historic these market moves have been. But place this in context, this period of time since this virus first broke out in China, how does it compare to, say, the great financial crisis? What's different over the last 5 or 6 weeks compared to previous periods of unrest?
Certainly people will be comparing to SARS. Unfortunately, the data for PMI, for example, doesn't go back to SARS levels. But I would say the extent of the disruption may be beyond SARS, because not only have we been seeing already a period of economic slowdown heading into the virus outbreak, also the impact that China has for the rest of global economy is much, much greater compared to 2002, 2003. So I would really compare the market reaction to financial crisis. But the actual fundamental disruptions from an economic standpoint will be probably even greater, because this is not only a demand side shock, it's also a supply side shock. The disruption, not only to China, but for the overall, the economic growth globally, will certainly be yet to see. And I think people have been underestimating the impact, mainly because people thought that this would be a China-focused or perhaps maybe an Asia-focused story. But as we've seen so far, this is likely to be a global story.
So let's bring you in there, Chris, on that. You know, you represent businesses around the world. We know a little bit, hopefully by Saturday, about the economic impact on China. Which sectors, which industries globally will be the worst affected by this? Is there an easy way to say it?
Yeah, I think there's a really, really good point made there, is about the role of China in the global economy, and particularly in the business economy. You know, 10 years ago, or when SARS hit the economy, it was sort of 10% of global GDP. Now it's 20% of global GDP. It's doubled. And so you're seeing the spread and the impact really as a result of that. It's also responsible for 40% of global growth. So that's really important. In terms of sectors, the immediate focus right now is around supply chains, manufacturing, and you're seeing all the results going down in all of those areas. But we're also seeing disruption around areas like trade transactions, finance, because people are not in the office to process the transactions, and then that has a risk of disputes and all those sorts of knock-on impacts. We were talking earlier about food production risks, that Chinese farmers getting their products to the consumer is an issue because cities are shut down, so the markets are not available. So there's interesting kind of impacts here, maybe around the acceleration of digitization, e-commerce. We saw this in the 2008 financial crisis in the UK, of course. Consumer patterns dramatically changed during that period. And also regionalization of supply chains, which is already happening. With other pressures around climate change, sustainability and digitization. Will this actually accelerate that in the future? Will be something to watch.
You represent one of the largest, if not the largest, business advocacy group in the entire world. And, it's clear that sectors like autos, like tech, like manufacturing will be very heavily impacted by this. Geographically, where are your members expressing that their pain is the worst?
Well, I think you're seeing that in the results. You know, it's the same areas. Obviously, the big concern is China. You know, that's where the biggest impact is by far, and around the Asia region. You know, that's the big concern. But, you know, we're starting to see impacts falling into Europe as well, as I already said, around financial services. The city has been impacted there. So we're monitoring it very closely, watching where those impacts are. First priority has got to be around containment and supporting governments to contain the issues. And then longer term, this is not the first health crisis we've had of this kind of nature. You know, what more do we need to do in terms of building more resilience into the global system so we can react faster, quicker to contain these kind of issues? Because they will happen. And globalization is not going away. However it's adapting, it's not going away. We're highly connected. You know, every single continent was touched within a week of the outbreak, and that says a lot about where the movements are, where the sort of interactions and relationships are. So I think first priority is containment, support the Chinese government. Longer term, we really need to look at food production systems. Where are these issues coming from? What do we need to do to get those issues dealt with, whether that's food standards or welfare standards or whatever that might be. And then, you know, building faster, quicker, rapid sort of resilience mechanisms into the economy, not just for government, but also from the private sector too.
You mentioned government there, and, you know, the German government, others are now stepping up and saying they will support industry in their country that's been affected by this outbreak. Is that something your members would like to see very broadly across the global economy? Is it something that they have specific ideas about how it can work? Is it essentially funds? Is it mechanisms of physical support? Is it providing delayed payments? I mean, what kind of measures do you think your members are calling for?
Yeah, it's hard to say. It's probably a bit early, but I mean, you know, businesses will certainly welcome support from governments. You know, if there was an interesting survey from Chinese SMEs that they run out of cash within a month. You know, at the small company level, a lot of the companies in supply chains, wherever you are in the world, are operating on very fine margins, and so support for them will be an urgent priority. That would certainly be welcomed by business. And having some flexibility from governments in order to find the right level of support, whatever that is required, is going to be important if we're going to, you know, sort of stem the you know, decline in profits and losses and everything else.
Chris, thanks for joining us this morning. Chris Southworth, the Secretary General of the International Chamber of Commerce, and Ginny Yan, the Chief China Economist at ICBC Standard Bank, will stay with us. For more on the markets in Asia, let's cross out to my colleague Emily Tan, who is in Hong Kong. Emily, what have we seen over the course of the day then?
A very dismal day as we wrap up the week of trade following the pronounced losses in the U.S. Overnight. Of course, the biggest one-day loss in history for the U.S. markets, putting them all in correction territory. And that was a little bit of a spillover effect because we have a number of Asian markets now also in correction. The Nikkei, the Kospi, the Hang Seng Index, the Shanghai Composite, ASX 200, the Singapore markets, as well as the Thai markets now all in correction territory following the big tumble that we had today. The Nikkei 225 closing down 3.7%. It did fall through 21,000 at one point in the session. The Shenzhen Composite a pronounced 5% pullback, 1801. The Shanghai Composite down 3.7%. This should be the worst month in about 10 months since May 2019 on those pandemic fears. Over in Korea, falling through 2,000, putting it at a 6-month low. This as the number of cases in Korea or outside of China jumping more than the number of cases confirmed being reported in China, and that definitely sending jitters through Asian markets. We got the Hong Kong market also sitting down today. We're off. We are at correction territory, down about to 2.5% on the day, 26,129. Australian markets also down on the day, down 3.3%. Now, all of this in reaction to the latest coronavirus outbreak. But I got a chance to sit down with Hong Kong's financial secretary today in a first on CNBC interview, and I asked him whether or not the losses in the market is an overreaction. This is what he had to say.
The outbreak of the coronavirus caught everybody by surprise. Initially in China, but now the situation in China seems to have been contained. But somehow this got spread. So I think going forward in terms of supply chain, in terms of consumer spending, that may be affected. But in Hong Kong, we have been trying very hard to fight this disease. Our economy has been hard hit. That's why in the budget we roll out measures to try to help stimulate the economy and to help relieve the burden on our people.
This week you did release your budget, and one of the big headlines was 10,000 Hong Kong dollars in a cash handout. It'll take a few months for the applications to be ready and then the passing out of the money.